Is this it for gold? A cooling off period perhaps, despite the abundant liquidity sloshing around global financial markets. I'm Jamie McGeever and this is today's Market Pulse. Well, gold had its biggest weekly fall last week, around 3.5% since May last year. Let's get out now to Michael Vidmer. He's metal strategist at Bank of America Merrill Lynch. Well, Michael, a pretty big sell-off last week, dipping below 1,600 to a 6-month low. And you say there are no obvious reasons to get back in buying now.
Yeah, that's true. I mean, that's something that we've been saying for almost 6 months now. And I think one of the big issues right now for a lot of market participants is that opportunity costs reflected by yields and interest rates in the United States have really been falling for 30 years. And I think the market right now revisits the direction going forward. And I think there was a fair amount of concerns that the only way for yields to go is up. And I think that really kept a lot of investors out of the market.
OK, you've been calling for that for 6 months, but only last month you said gold will reach $2,000 an ounce within 6 months.
That is true, and I think that there is upside left, I think. But I think the driver will not be along rates. I think it will be along the lines of interventions by emerging market central banks, for instance, on the back of a weaker Japanese yen, particularly over in Asia, and then continued reserve diversification and potentially also a pickup of inflation. So I think there is a leg up, but that's more a story for later this year and then out into 2014. OK, and in the shorter term, last week, as I said, a big fall, and we smashed through the 100-week moving average, which hasn't been broken for years. Does this bring into sight 1,500? I think gold market tries to trade towards round levels. I would not be surprised if at some stage we went down there over the next few weeks, absolutely. OK, and what is the bullish case for gold in the short term? Is there one? It's difficult. Pick up in inflation. I think some of the central banks reinforcing that they keep monetary policy low for quite a while. I think the market readjusting their expectations over how quickly interest rates will rise. But to be honest, to me, a lot of the news flow that could push gold prices up one way or another has been priced in right now. So I'm not sure that you're going to see a major rally in the next few weeks. OK, Michael, thank you very much. That was Michael Vidmer at Bank of America Merrill Lynch. Well, Natixis is the star of today's chart point. Shares in the French investment bank up by more than 25% after it set out restructuring plans. The bank will shed its stake in the network of cooperative lenders that control it, allowing it to pay back €2 billion to investors. It may not be all good news for investors, though. My colleagues at Reuters Breaking Views warning today that the move could mean lower multiples for Natixis' more wholesale-focused earnings. That's all from us for now, but join us every day at this time for a look at what's moving in markets and why. I'm Jamie McGeever. This is Reuters.